Is there a holy grail to trading? We're going to look at some research that suggests there possibly is, and it lies within momentum trading and looking at the top performing industries on the market. That's where we focus our research consistently and share with members. But the question comes up, is there any proof that there's this kind of holy grail sitting in there? Or if there is one, how close is it? The US investing champions over the last 20 years or so, most of them fit within that momentum trader group, and that's like the Mark Minavinis of the world. They get 50% returns or triple-digit returns year after year after year. So, what does it look like? Well, if we think about looking at all of the companies listed on the market and then ranking them by performance, we then look at the top group. That group, how big is it? If you Mark Minavini, that's generally 8 to 10%. He's looking at the top 8 to 10% of the market performance-wise. Or if you Killamagi, that's going to be the top 2%. Whatever that universe is, they're the top performing companies on the market. At the same time, you want to then run that research, every company listed on the market, and then break them down into their own individual industries, and then rank those industries to find which ones are the top performers. We do that research every single week, and we love that research, so we really stand by and support this research. So if you overlap those two universes, you've got the top performing companies and the top performing industries, you find the companies that are in that group, and that's that holy grail that Thomas Bulkowski is kind of talking about. So why is it? Well, when you overlap these two groups or universes, you're going to separate those companies that are short rallies. They're companies that are only momentarily strong. So they're going to be weeded out. And what we're focusing on is the companies that have a long-term mega trend, like monster stocks, those massive, massive rallies being the strongest companies. And we're going to look at Thomas Bulkowski's research to understand this. He's looked at it from the approach of, how do I identify market-leading momentum companies for those monster stocks? And his response is, well, it becomes with understanding stock relative strength. What is that? Well, if you think about a company that's up 10% for the year, that sounds great. But if the market's up 20%, well, that's underperformed. That's a relatively weak company or low relative strength. In that market that's up 20%, we want to be looking at companies that are up 50, 80, or 100%. And if we rank them all by their performance, we're then looking at that top 2% or 10%, whatever that is. So that's relative strength, relative to the market and everything else listed on the market. Within that group, he's proposed, well, what if I just buy the top 5 companies, the 5 best performing companies on the market? And he found that if he held them for the top 5 until they dropped out and became out of the top 10, so 11 or onwards, then he'd sell them. What happens? And what does that look like compared to the market? Compared to the S&P 500, he found that that gave him a profit factor of 2.6. So he outperformed the market 2.6. But what if he extended that a little bit further? What if he held the top 25 companies and then sold them once they fell out of the top 50? So they became ranked 51 or onwards, and that became his sell signal. What happens then? Well, his return increased from 2.6 to 2.9. That suggests it's even better to hold the top 25 and then hold them until they get to rank 50th and drop out. That's kind of his stop loss in a way. Sounds great, but when you look at the numbers, you can see that the number of trades that you were required to take for holding that 25 companies actually becomes quite painful. You end up with a huge amount of losing trades. Your winners more than pay for them, but you're taking a lot of paper cuts, and that takes a really thick skin. It's a hard militaristic approach to consistently apply time after time. Someone like Killamagi does it, and he's absolutely killed it. But most of us aren't like him and don't have that ability to see that kind of trade and pattern through. So he's then looking for another way of doing it. But realistically, if you can survive a low win-loss ratio, huge amounts of trades, a lot of turnover and churn, and then re-entering all the time, it can outperform it. But is there something better? So we talked about that crossover before, the Venn diagram, where you have the universe of the top performing companies. We've just seen what that looks like. But then if you cross that over with the top performing industries, well, let's just have a look at those industries for a second to understand. And this is once again Thomas Bulkowski's research. We really thank him for doing this and delving deep into it. Before we get to the numbers, just think about it anecdotally. Every single one of us who has traded the market has experienced this before. There'd be uranium companies that are running rings around the rest of the market. Lithium companies shooting the lights out. We had the commodity super cycle back throughout before the GFC. Consistently, we've had thematics driving the market leaders at the time. Tech stocks more recently, so on. You get the picture. And if you take that lens all the way back, you're going to see that it was when the introduction of automobiles, those companies shot the lights out. The introduction of the wireless radio and also railway stocks. It's been the same thing time and time again, that new technology that's driving the market leaders and the best performers. So let's take that into the data and see what he found. Well, when he looked at it, he grouped them. And he thought, well, what if I hold the top one company, the first company in the top performing industry, the second, the third, and so on and so on. He actually found that the performance was not so great if you just held the top performer or the top two performers. It got better with 3 and 4, and about 5 is sort of where it plateaued out, depending on how long you ended up holding that leader for. We're going to have a look at this table here for a second. We can see that if you hold for 1 month, you get sort of a return of 8%. But as you extend that for 2 months, 3 months, 6, 9, a year, and so on, you end up extending out that return. He's looked into this in a great amount of detail, and what we too learn is that if you hold a top performing thematic, it can be a great underlay, a good base, a good tailwind to help propel us to outperformance of the market. So then it begs the question, well, what if you overlap these two? We know that if we hold the top 3, 4, or 5 companies in an industry, while it's still performing, and we know that if we hold the top 5 companies until they drop out of the top 10, we still outperform the market. But if we filter the companies so that we're only holding the top performing companies that are in a top performing industry, then what does that do to our performance? Well, if you look at Mark Minervini, follow his trades, you look at Killamagi and follow his trades, you will see that's consistently what they're doing. And the question that we often get once we describe this and people understand that relative strength and that sectors and industries and thematics are important, which we all already knew, how do you stay on top of it? That's a question we always get. And that's what we're creating our reports for. And Gary Glover goes through this every single Friday on the Friday videos. The reports we share with members on Thursdays. Killamagi looks at the top 2%. That's about what we do every single Friday. We look at the top 2% of momentum companies on the ASX. And then Gary Glover goes through and finds out, well, what do the charts look like? Where are the opportunities? Do we understand the thematics? What's driving this? Is there more legs in it? What's the probability of it moving? And what's he trading? To that point, we say this research, we strongly support it. We're advocates for it, and we do share it the best we possibly can. Subscribe. Let us know in the comments below what research you use or what approach you take to momentum trading and outperforming the market. And if you want the reports on Thursdays, join as a member below. We're going to put on screen some other videos that really help momentum traders and understanding how and why we don't use GICs, but we use our own thematics for the outperformances.